Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. Um, it's been a kind of a surprisingly choppy week for um, what it's been kind of like a follow-up market, follow-up tape to the election and all of the vaccine news. There's been a lot of names moving, but a lot of those are lower market cap, cheaper priced stocks that aren't really like the go-to names like on a day-to-day trading basis, right? So a lot of like the lesser followed EV names, some alternative energy stuff, some of the crypto names. So it hasn't been like those normal go-to stocks. And then there's been a lot of names, like a lot of the big names that have just been kind of drifting around lifeless, right? Um, Now there have been really great two-way opportunities. So whether in tech or in the reopen names, I mean, there's been a lot of action back and forth. I think one of the main takeaways I've had is that it's good to have trades in place on both directions because things are getting paid on both directions. So sometimes we're in a trending tape, it's a lot more difficult to make money on the short side. If we're in a very volatile tape, then kind of have to be careful with what you're doing because things can really move quickly. Right now, for as being a little bit quieter as we are, there's some good action on both sides. So I like to have like a little bit better of a mix of bullish to bearish. So right now maybe like 65-35 bullish to bearish, 60-40 bullish to bearish. But I do like to have like a good mix of bearish trades, especially if we do get a turn lower, maybe a little quick dip, can make some money on some stuff on the downside, right? That being said, I feel like being short is requires more patience, even more so than being long right now, because things are taking a little bit longer to develop, and I feel like even on the downside, things are taking even longer than that. So what I like to do is I like to focus on these relatively weak patterns, and the reason why is because I feel a little bit more comfortable sitting in these over like a longer stretch because the stocks have been materially underperforming, right? They've been underperforming for a few months. They're really struggling to bounce. This versus say like fading top performing names looking for a quick dip, right? Like I like to focus on underperforming, relatively weak names looking for that next leg lower, right? So for Intel, obviously coming off a couple bad quarters, stock broke really substantial long term. So if I go to the weekly, right, you can see it broke below this 200 week. Definitely got me interested as a short. Also, it's hovering right above like this key yearly support range, right? And as you can see on the daily, it's below its 8 EMA, it's below the 20-day. It's got that 8 EMA 20 catch-up trade, which I like. And it seems like it's due for a breakdown, right? Now, the problem with that is timing because right now it's just not moving to the downside, right? So I feel like it's a quality bear setup. I feel like it's relatively weak, and I feel like when tech finally breaks down, or maybe when semis start to roll over, that this could really put together a strong move to the downside. But the timing is important, right? So I like to err on the side of more time. So instead of doing like 2 weeks, I'm thinking 2 months. Yes, I might not need that because if it does break, it could be a real fast move to the downside, but I also don't know when it's going to break, right? So instead of sitting there letting the options just burn, I want to go with something a little bit longer with a little bit less theta, and I can sit. I can let it develop. I can give it the time it needs to, and then when it finally does go, or if it finally does go, I can be involved with it instead of trying to time it exactly. Try with the weekly contracts and get stopped out when it doesn't go, or try with 2 week contracts and just watch it sit sideways and get my options ate up. Give it a little bit more time. So I got through January, waiting for a move down through like 43, 444, 43.50 could really trigger a nice breakdown. And yeah, I mean, I would have loved for this to play out immediately, but it doesn't always work that way. And sometimes you have to be patient, and this trade requires patience. All right. So again, I mean, I like having like a pretty good mix of bullish and bearish trade ideas right now because there's things working on both sides. But it's always important with options trading is to get your time frames down, and specifically on Intel, I think having a little bit more time could really be more beneficial. All right. So if you like this video and you're looking for more information on option swing trades or options trading for earnings, please follow up with the link in the description of the video for more information on options in play. Hope you have a wonderful night. Stay well, and I will talk to you all tomorrow.